Imagine owing the bank everything you have, then printing the money to pay it back. Sounds like madness, right? Yet that's exactly how the most powerful nation on earth keeps its empire alive. The United States has turned debt itself into a business model, a system where borrowing creates profit, and the bill is passed to the world. In 2024, America's federal debt crossed $34 trillion, a figure larger than the entire U.S. economy. Any other country would collapse under that weight, but not America. Its bonds are still called risk-free. Investors still fight to buy them. Why? Because behind the illusion of debt lies the greatest financial trick in history, a loop where the government borrows money from itself. Here's the secret. When the U.S. Treasury issues bonds, it's promising to pay back money it doesn't yet have. Those bonds are bought by banks, investors, and when demand weakens, by the Federal Reserve, America's own central bank. The Fed doesn't use tax money to buy them. It creates new money, digitally, with a keystroke. Debt becomes dollars. Dollars become power. The circle closes. It's a system that defies common sense, yet sustains the global economy. The same paper promises that fund stimulus checks, wars, and Wall Street bailouts are nothing more than the nation's IOUs recycled, repackaged, and worshipped as assets. But this didn't happen by accident. It was designed, tested, and perfected over centuries by politicians who realized that control over money means control over power. To understand how America mastered the art of making money from its own debt, we need to go back in time to the moment this trick was born. The year is 1790. The United States is young, broke, and barely standing. Soldiers from the Revolution haven't been paid. Creditors circle like vultures. The government owes the equivalent of $75 million, a mountain of debt, for a nation that doesn't even have a stable currency. Enter Alexander Hamilton, the first Secretary of the Treasury. His idea is radical for its time, almost blasphemous. Instead of erasing the debt, he wants to embrace it, turn it into a foundation. A national debt, he wrote, if it is not excessive, will be a national blessing. His plan, consolidate all state debts into federal bonds backed by the government's promise to repay. It worked. Investors began trusting the new American system. European bankers, who once saw the colonies as a financial wasteland, started buying U.S. bonds. Suddenly, debt wasn't a sign of weakness, it was a tool of power. America had found its fuel, credit. But the idea came with a price. Once you build your system on debt, you can never truly stop borrowing. Every war, every crisis, every promise to voters would require new bonds, new money, and more faith. By the Civil War, the Union printed greenbacks paper money not backed by gold to finance its survival. When the Federal Reserve was born in 1913, it institutionalized Hamilton's logic. For the first time, America had a permanent central bank ready to create money and absorb debt whenever needed. The foundation of the modern debt machine was in place, but the real transformation, the moment money itself would lose its anchor, was still to come. And it would begin with a single, irreversible act in 1971, when America quietly severed the link between paper and gold. The year is 1971. The Vietnam War bleeds billions from the U.S. Treasury. Foreign governments, uneasy about the growing mountain of American debt, begin demanding gold instead of paper dollars. The U.S. owes over $50 billion abroad, but holds less than half that in gold reserves. The math doesn't add up, and the illusion of stability is about to break. On the 15th of August, 1971, President Richard Nixon appears on television. His tone is calm, almost reassuring, as he announces the temporary suspension of the dollar's link to gold. In that single moment, the world's monetary anchor snaps. The dollar is no longer a promise backed by metal. It's backed by faith and the U.S. government's ability to issue infinite debt. From that day, every dollar became a piece of government IOU. Money and debt fused into one. The gold standard was gone. The debt standard had begun. The consequences were immediate. Inflation surged through the 1,970 seconds, hitting 13% in 1979. Gas lines formed, wages lagged, and faith in the dollar trembled. Yet, beneath the chaos, a new system quietly took shape, the petrodollar deal. Washington persuaded Saudi Arabia and its OPEC partners to sell oil exclusively in U.S. dollars. That ensured global demand for American currency and, by extension, for U.S. debt. America had found a new kind of gold, trust. Nations needed dollars to buy oil, and the only way to get them was by holding U.S. treasuries. Debt became the export. Paper promises replaced real wealth. It looked like a triumph, but it was really the setup for the greatest financial illusion in modern history. Because if money could be created from nothing, what stopped America from lending itself forever? Here's where the illusion becomes real. The U.S. Treasury issues bonds to fund government spending, wars, welfare, bailouts, everything. Those bonds are sold to investors, banks, and foreign governments. But when demand slows, another buyer steps in: the Federal Reserve, America's own central bank. The Fed doesn't need to raise taxes or sell assets to buy those bonds. It simply creates new money with a keystroke. In 2008, during the financial crisis, it purchased over $1.5 trillion in treasuries and mortgage securities. In 2020, facing pandemic shutdowns, it added another $3 trillion. That money didn't come from taxpayers, it came from digital nothingness. The Fed typed dollars into existence and used them to buy government debt. This process has a name: quantitative easing. But behind the jargon lies the ancient alchemy of empire, turning promises into power. The Treasury borrows, the Fed buys. The money circulates through Wall Street, inflating stocks, real estate, and government budgets. Every cycle makes the rich richer, the system more fragile, and the illusion stronger. It's the same pattern history has seen before. Britain financed its empire through perpetual bonds in the 1800s until its currency collapsed after World War II. France, in the 1700s, used paper notes to fund wars until inflation sparked revolution. Debt builds empires and destroys them. Today, America's version is digital, invisible, and global. The Fed's balance sheet now holds over $7 trillion in assets, most of it U.S. debt. The country has become its own biggest creditor. The trick works, for now. But every trick depends on faith. And faith, once shaken, spreads faster than inflation itself. Because the same mechanism that powers the system today is the one that can break it tomorrow. Today, the United States owes more than $34 trillion, and that number grows by billions each day. Yet markets remain calm, as if the debt no longer matters. But beneath the surface, something is shifting. Foreign governments like China and Japan, once the two largest buyers of U.S. treasuries, have quietly reduced their holdings. Confidence, the invisible glue of the system, is beginning to thin. As the world buys fewer American bonds, the Federal Reserve must buy more. More bonds mean more money creation. More money means more inflation. And inflation is the quietest, most effective tax ever invented. Prices rise, savings shrink, and the average worker pays the price without ever seeing the bill. That's how the empire sustains itself, by diluting the value of every dollar you hold. This cycle isn't new. Rome debased its silver coins until trust collapsed. Britain drowned in post-war debt when the pound lost its dominance. France's paper money fueled revolution. Each believed their currency was immortal. Each was wrong. America's strength is not gold, not oil, not even technology. It's belief. Belief that the dollar will hold. Belief that U.S. debt is safe. Belief that the illusion can last. But when belief fades, every empire faces its reckoning. And that's the hidden truth. America doesn't just make money from its debt, it makes power from your trust. But trust is fragile. Once it cracks, no central bank can print it back. History has spoken this warning before. The question now is, will we listen before the illusion ends?